Welcome to another day in the Matrix, or I should say another year in the Matrix. This is Red Pill Podcast 145. I hope you're all having an amazing start to this new year of 2024. I appreciate every single one of you, and I'm so grateful for this community. I can't wait for what this year has in store for us. And I'm kicking this one off with a very special podcast. This is going to be packed with information, sort of to prepare us for my upcoming Year of the Dragon Decoded, which will be coming out very soon. I'm hoping to have it released right before the actual start of Chinese New Year. So stay tuned for that, and I will definitely let you all know when that is ready to be launched. And in the meantime, we have so much to get into today. As I said, preparation for what could be going on over the next 48 hours, and I've given you plenty of warnings. I even shared a new decode over in the community about this Economist cover, so we'll be getting into that in a little bit. But for now, I hope you're all having an amazing day, an amazing weekend, an amazing start to this new year. And if you are new here to our community, welcome to the Wolfpack. It's so great to have you here with us. If you've yet to get Discord server access, just go ahead and send me a direct message here on Patreon with your Discord username and last four numbers after your username, and then I will reply back to you on a Patreon message with your Discord server invite. That's the only way that I could do it. Please don't comment your Discord details below or send me an email. I cannot help you that way. Please follow those instructions. As well, we're doing amazing with the coin voting system. Last week, I shared a very special podcast, Red Pill 144, where I went over my entire investment thesis and all of the projects that I'm personally investing in. So I shared an update that moving forward, those 13 to 15 different projects, however many there were total, those will be coins that I will cover every couple of months, every 2.5 months-ish, to be prepared for any big pivot moments. But that way we don't need to vote on those coins anymore, because those are the most popular submissions and it kind of bogs down the voting system. So I made the executive decision to do that moving forward, and I think it will be the move. I think it will make this process much more enjoyable week by week when we're covering new projects that we have not covered in quite a while. And a reminder, I try to give at least 2 to 3 months in between covering any project. This way we could get some more data in the charts, and then when we review it next time, we have some fresh data to work with. So the next time I'll be covering all those projects such as VeChain, Theta, Cardano, Chainlink, etc. That will be in the Red Pill podcast right before eclipse season. So I want to get that out there right around my born day. So sometime in March. And again, this is, I think, the most effective way to just bring the most value to what we're all doing here. So let's get straight into this one today. I want to actually recap the information that I shared in my last YouTube video, go into this a little bit more in depth, clear up some confusion. I think it'll be very, very helpful for us. So we're here on the Bitcoin index chart. We're looking at the daily. And essentially what we're going to be doing right now is looking at the month of January and how we have this pattern that I found. And again, I discovered this pattern and immediately went out of my way to share it with everyone, because we are just moments away from getting to the last day of that pattern, which is January 8th. So here we are today, Sunday, January 7th. We know that later on today, right before the crypto market closes, the weekly candle, we'll have the CME open, Chicago Mercantile Exchange, for Bitcoin and Ethereum. We'll also have precious metals, Forex, and the Dow Jones. So starting tomorrow, when the stock market opens, that is January 8th, that is effectively the last day of this pattern that I discovered. And it does seem that it's very likely that that will be the microcycle top for quite a while. And what I'm going to get into today is, again, this isn't FUD. This isn't to have people FOMO in. We're far past that. We've already talked about a lot of this stuff now for months, and we're just coming into these final moments of it. And I did my best today in preparing this podcast to find all of the information in all of the years since Bitcoin's Genesis block to get you the most accurate information so that you can be aware that this isn't WatersAbove's opinion. This is the charts. I really want to clearly delineate those two things. I do state very clearly whenever I have an opinion. So going back about 6 months ago, actually about 7 or 8 months ago now, I shared analysis which led me to a call of 40K Bitcoin before the end of 2023. We effectively got that right into the end of the year, hitting 40K on December 4th. And then I started to, leading up to that, reveal some information that showed how this move into the golden pocket between the 618 fib and the 786 has a pattern to it in and of itself. And we don't have many cycles to go off of, but we do have a very clear pattern. And all this pattern reveals to us is something called a bull trap, meaning we should not break current cycle highs. This would effectively be a lower high, and we're due for a correction to follow. In all of that analysis, we were very clear that the charts show a potential move up between 47 and 52,000. Now, of course, 52 would be the extremes in the data. That would be if we were to mimic what happened here in 2019, where we see on the date of June 27th, we had this huge blow off top wick, and then we came down and closed beneath the 786 fib, followed by a correction. So there is extremes in the data. As technical analysts, we need to talk about those, especially when we're here in crypto, which is the wild, wild west, and we have insane volatility, volume that could kick in out of nowhere, and we don't need much of a liquidity injection to make things go up really fast and crash just as fast. So we are perfectly on track for a lot of the things that we were looking out for, and we're now getting into the final moments. And what I discovered about this month of January, which we're going to recap now, could very well be revealing how this next week is going to go and how the ending of this so-called bull trap could go. We're going to go all the way back now to 2012. So here we are in the charts looking at the last year of the dragon, which we're not going to talk about too much today, but we see this moment here where we're moving into the year of the dragon, and we have effectively the highest daily candle close in this cycle ending on January 8th, followed by a correction. And the correction became noticeable by January 17th, and then no new highs, no new daily high until July. Keep that in mind. Keep that in mind, the month of July, okay? Now we're going to be going over to 2014, and we see, although we did effectively end our bull run in Q4 as usual, we see that right over here we had a bull trap, a bounce back into what would be the micro golden pocket. So if I pulled a fib from here to this swing low right there, we got into this golden pocket territory followed by a rejection, which we would call a bull trap. That's actually what we're doing right now, but in the macro scale. What I just showed you was just a little trick you could use for the micro, for the short term. So what we want to emphasize is this move up into January 6th, followed by a correction the next day. So keep January 6th top in mind. We're going to be going over now to 2015. And we're going to see something very similar. We're right here. We dumped into January, but we came up into January 7th. We had our highest daily close in the month of January on January 7th, and then no new high closes until the month of July, right over here. And that actually effectively was a fake out followed by a deeper correction. And we want to think about this because this setup that we see right here of bullish movement into kind of a rare higher high bull trap, if you will, leading into this big correction. This is almost identical to the structure of February and March of 2020 when Bitcoin had the C19 crash. Well, the entire market had that crash, but this setup of us moving up and then followed by this deep correction with a quick buyback and then going higher afterwards. Well, if you go to 2020, you see what I mean. So we rose up right there into February, crash, got right back, recovered, and we continued up in the cycle. It's almost identical what happened over here in this moment. Now, we got that out of the way. Let's remind ourselves of this January 7th effect that we were just talking about. And that is, again, we have our 2012 cycle, January 8th. We have 2014, January 6th. We have 2015, January 7th. Now we're going to go over to January 2016. And look what happens. So here we are in 2016. We have our January 7th green candle, January 8th top, then no new highs essentially until the month of June. Again, there's a pattern here. Now we're going over to 2017. Look at this. Straight up just pumped into January 5th. That was your top. Correction the same day. This is a unique higher high bull trap followed into this March timeframe over here. And then again, correction. And we really didn't start recovering until around this April timeframe. So that's really interesting, okay? And I want to keep in mind this move right here that we got in February, where we had this quick correction, come back up into February, didn't make new highs until around the month of March, but this was all a higher high bull trap, because you can see we had a deep correction after that. So instantly a 30% correction, and then again followed by another 30% correction. And this cycle was just 30% corrections the whole way up until we topped out. But again, emphasis on early January and really no recovery until, you have about April is when that would be truly recovering. They're going to go over to 2018 and see what's going on here. And there you go. We have the end of the bull run and then a bull trap into January 6th. Effectively by January 7th, we were rolling over. Again, got this pattern of January 6th through January 8th. We're going to go over to 2019. Going to zoom in, and right here on January 2019, we have the 8th of January. Would you look at that? So this is really incredible. We have this fake out move into January 8th. It looked just like what happened in 2018 too, and then a big correction a couple days later. We effectively didn't really go much higher until the month of April, and then we recovered out of that. So kind of similar to the past year as well. But it's this January 8th thing that is just wow. Like, we don't have a year where we made it higher on the January 9th, in most iterations at least. It's just so sudden on January 8th. Now, we have had years where we just continue going up the whole January. Of course, we have those. They're rare. They do happen. But the pivot of January 8th on a majority of these iterations is so obvious. So we're going to be moving over now to 2021. And we have right here this January 8th top, followed by January 9th pivot, correction, and we did not have a new higher close until the month of February. So here we have essentially 8 iterations of this micro top happening on the dates of January 6th through 8th. Tomorrow is January 8th. We still have the years of 2011, if you want to count that. We have 2013, 2020, 2022, and last year. So effectively within the last 4 years, we had 2020, 2022, and last year not being considered in the data that we just reviewed. So essentially 60% of the time, over half of the time, Bitcoin is having this short-term top in the month of January, between January 6th and 8th, as we just reviewed. And it would be 2/3 of all years if we did not count 2011. Of course, considering to not count 2011 because it was like the first year of Bitcoin really trading with some volume. 2009 and 2010, there was almost no volume, and it was trading at like a fraction of a penny. So If we took out 2011 and considered everything, that'd be 66% of the time, or 2/3 of the time, Bitcoin is topping out by January 8th. But to be thorough, let's check in with these years that Bitcoin did not top out between January 6th through 8th and see what's going on. So we're going to add even more value to this, get into the nitty-gritty, leaving no stones unturned. This way people can see what's going on here, and it will reveal to you the cyclicality of these markets. Again, ran by gematria, numerology, and astrology. So we're going to go all the way back to 2011 just to entertain this cycle. And we moved up right here to around February 10th. So I want you to keep this in mind. We were sideways until April, but February 10th. Now we're going to go over to 2013. And 2013 was incredible because you can see we were very sideways moving into the new year, and then we just rallied straight into April, all the way up into April. Just like in 2011, we went sideways until April. Now let's go to 2020. Probably the most famous year in this cycle because Bitcoin was quite popular at this time. And then we had one of the most dramatic crashes ever. And Bitcoin was very bullish on this crash because it held lows in the overall cycle. It did not go lower than the selling climax lows. That was very bullish because a lot of altcoins actually broke the cycle lows and went even deeper into their absolute cycle lows on March 2020, whilst Bitcoin was holding structure, holding a bull trend essentially. But you can see right here that we moved up until the month of February. And I want to zoom in and show you the date of where this went. February 12th, effectively February 13th, we wicked a little bit higher. February 14th, we had the highest daily close, but we're splitting hairs here. Let's just call it February 12th. Okay, then we had the C19 crash and then no new highs from this top all the way until July, which aligns with what we identified in the data from the other years topping out between January 6th through 8th. Even on all those 8 iterations, we saw recovery into July. Now we're going to go over to 2022. Let's see what's up. And then you have right here, starting the year of 2022, we moved up into February 10th. Would you look at that? It's pretty interesting. So 2022 was the start of the bear market. Bitcoin came up to test the January 2022 highs in late March, which would be compared to around the same time of our upcoming lunar eclipse on March 24th of 2024, which is exactly 77 days away from today, by the way. So then we're going to go over to 2023, or last year, and we're going to see how this cycle went. Now, Bitcoin went up until February, right there around February 15th into the third week of February, and the timing of this move into February 20th peak, followed by the March 10th bear trap, was very similar to what happened in 2020, to the days. So we had this move up right here, followed by a correction into March 10th. And I want you all to remember, March 10th, 2023 was the day that Silicon Valley Bank failed, as well as failures during the same week of Silvergate and Signature Bank. So it was a black swan event of retail banks. It was a retail banking crisis. Then after this correction, Bitcoin continued into April, and then a correction with no recovery until July. So April plays such a big role in this, as well as the month of July. And you can see that those are the patterns no matter what iteration it is. Now, April is specific to the fact that it's Satoshi's birthday. It's also the start of Q2, but it's Satoshi's birthday, and we'll get into that in a moment. But remember, this upcoming April, we have the solar eclipse on April 8th. We also have in April the Bitcoin halving. That's big. So we have some exoteric data, and we have some more esoteric data to consider. We've been talking about this for a while now, but we're really dialing it in. So something to note is that 2011, we had eclipses in June. So we're going to go all the way back to 2011. We had eclipses in June. And that was the market that had a short-term top in early February. In 2013, there was eclipses in April and May. This market topped out exactly on the new moon that came in before the lunar eclipse. Note, in our cycle now, the new moon that would be happening before the 25th of March lunar eclipse would be March 10th. Keep that in mind. March 10th is powerful, guys. We had last year on March 10th a retail banking crisis, and then in 2020 on March 11th, right after that moment, we had the pandemic. So March 10th and March 11th are really fascinating. I don't want to get too off the rails here, but I just want to bring that up for everyone. The fact that this upcoming new moon before the eclipse season is March 10th. We're going to show you right here what we're talking about. Boom. New moon, March 10th. So I just wanted to mention that this cycle that we had in 2013, we rallied into that time frame, which I find really, really fascinating that we topped out exactly on the new moon. Let me zoom in and I'll prove this to you. If I pull up my moon phases, this blue dot is the new moon. And this was your eclipse, and this was an eclipse season. Third solar eclipse in the solar cycle. And if we were to align that with what we have right now, that would be March 10th. So in 2020, we had eclipses in the month of June. Right over here. We had our eclipses. So after the C19 crash, and remember, the 2011 market also had eclipses in June. Also a short-term top in February, just like this market example here. And since we have these two examples matching up, both having eclipses in June, this tells me to count this out. So since our eclipses are in March and April, then in 2022, we had the eclipses in April and May. And the market topped out in the new moon before the solar eclipse, just like 2013. This is mind-blowing. Also, excuse if I have to pause the mic here and there. Kind of recovering my voice. I've been having a lot of client calls, a lot of meetings. Did a 2-hour live stream yesterday, so I'm gonna get through this one, I swear. Just if you ever hear me pausing or taking a breath, it's because of that. I'm trying to power through this one. Anyways, getting back to this, I just wanted to share the kind of cyclicality of how we top out right before eclipse season on these new moons. So in 2013 and 2022, we essentially did the same thing. We came up into the new moon highs before eclipse season, and then we had a correction. Lastly, we have 2013, the eclipses in April, right here. We had our eclipse season effectively start on April 20th, and in May. The market moved up right into that solar eclipse that started our solar cycle, which is something I was calling for at least a half a year before it happened. Again, based on this concept of solar and lunar cycles and how Bitcoin behaves during these phases. What's noticeable here in this example is the power of the new moon being short-term micro tops. We can see this rise from the start of January into this January new moon, Then we correct into the February full moon. Then it follows by a pump into the new moon of February, followed by a correction into the March full moon, followed by a recovery into the March new moon, and then a correction, and then you have eclipse season. So we can tell the power of not only these eclipses and being big pivot points in our overall behavior of the price action, but within the eclipse phases, we have these new moons and full moons to consider. So just to recap, the 2011 and 2020 examples were similar. The 2013 and 2022 examples were similar. But this 2013 market is very wild. Let me just show you right here. I'm going to turn off these moon phases. And this is kind of throwing a wrench in some things, but I don't think it is. I just need to be transparent here and share my thoughts, and then you guys can formulate what you think based on all of this. And also consider this ETF thing that's going on right now. But let's zoom into around December of 2012 into the pivot of 2013 around January. And right here between let's just call it the 13th of December, all the way till around January 16th, Bitcoin was struggling to get above this macro 702 fib and was very low volatility. I mean, look at this. It was barely doing anything during that month. Back then, Bitcoin essentially got within the 702 fib by December 6th, and in today's market, we've actually got to this 702 fib by December 5th, within 24 hours. So this is definitely flaring up my intuition a bit, because now we've been sideways and struggling to get above the 702 fib, just like back in 2013. Now, I'm not just making this up. Now, it's just something to consider, you know what I mean? And the move we're looking at, Bitcoin was essentially trading up into the third solar eclipse of the solar cycle, and we're on our way into the third solar eclipse of our solar cycle on April 8th. So, yeah, this is like kind of weird. And we have this 2020 market where we had this black swan event across the board. And we were topping out in the February new moon before this crash. And if we looked at the exact date of this, it was February 12th, February 13th. Back in 2011, it was February 10th. And in 2022, it was February 10th. So out of these 5 iterations, 3 of them had a short-term top between February 10th through 13th. And this year, the February new moon is on February 10th. So we have 8 out of 13 iterations topping out on the dates of January 6th through 8th. Again, tomorrow would be January 8th. Then we have an additional 3 of those iterations topping out between February 10th or 13th, making 11 out of 13 of these iterations topping out before the month of March. That's a lot of data. So these 2 other anomalies are the year of 2013, which I was just kind of talking about, and also we want to consider 2011 for a moment because of the eclipses that were in June 1st through June 15th. And look at the way this all went down. So here is June 11th. Or sorry, it was June 1st. So we had an eclipse on June 1st, and then we had eclipses on June 15th and 16th. And look at how the market topped out on June 8th. Right between these eclipses, Bitcoin went parabolic into eclipse season. Then in 2013, we went up into eclipse season, topped out before it. And in 2023, the cycle we just had, we had Bitcoin make a microcycle top right before eclipse season, just like in 2013. So in 3 out of these 3 iterations, we're moving up into eclipse season. We're effectively closing higher than that prior or second solar eclipse of a solar cycle. So to summarize this, I feel we need to disregard the 2011 example. It's just too early in Bitcoin's life cycle to consider, but we still have to keep in mind the whole pumping into eclipse season truth. This gives us 4 years to work with the examples of 2013, 2020, and 2022, as well as last year. Now, in 2013, Bitcoin pumped into eclipse season in April and May, breaking all-time highs. Then in 2020, Bitcoin topped out in February 10th, February 12th before a crash. In 2022, we were effectively topping out around February 10th, I believe it was. Yep, right there around February 10th. Then we had a higher high bull trap on the new moon before eclipse season, trading into about 48K Bitcoin. Then, this is what's fascinating. After Satoshi's birthday on April 5th, Bitcoin traded to 47K one last time, and coincidentally, Satoshi's 47th birthday was that day before continuing on with a bear market. Still to this day, Bitcoin has not traded to 47K since the exact day of Satoshi's 47th birthday. So we need to keep in mind the fact that Satoshi's 49th birthday is coming up on April 5th. It's very soon. Then we have 2023, like 2013, pumped into eclipse season. So I feel it's also necessary to remove the 2020 example because of the black swan of the pandemic. Now we're down to 3 years, which is 2013, 2022, and 2023. 2013, the top in the microcycle was April 10th. 2022, it was March 28th. 2023, it was April 14th. So we're seeing by the end of March into like the second week of April, that would be the other data to consider if we're not going to top out right now. Also, if we wanted to consider 2020, along with 2013 and 2023, it took all the way until October to be noticeably bullish again. So here we have 8 out of 12 iterations topping out before January 9th, which would be within a couple days from today. 3 iterations are topping around February 10th to 12th. It's a little more rare, but it does happen. It's only a month later, a month from today. And then we have 3 iterations topping late March into early or mid-April, right there into eclipse season. What this means is essentially no later than the very beginning of Q2, and to expect a correction within Q2, especially if Bitcoin does not correct into this month of February that's coming up. Now, based on the technicals, I've said many times it would be strange for Bitcoin to break 50,000 and hold a daily close above 50,000 right now. Please pay attention to what I just said. A daily close above 50K is unlikely. Now, we can wick to 50K or even a little higher, sure. During this time when we initially trade into this golden pocket territory between the 618 and 786 fib, we typically see a retest of the 0.5 fib. Sorry if this isn't as clean. I should probably be looking at this chart so I could show you, and this is much cleaner for everyone. Okay, so here we are where Bitcoin's trading right now. We have the top of the 786, and then we have the 0.5 fib. I want you to think about this. So during this time, when we initially trade into this golden pocket for the first time in our overall cycle, we typically see a retest back to this 0.5 fib. That's normal. All right. It's also typical that we do not close higher than the 786 fib. And especially continuation is not expected either. So what this all means is we're in the final moments of this bullish move and this bull trap, and Bitcoin's likely to maybe make one more swipe up, but also very likely to come back down to 30, 32K before getting back above 50K in closing dailies and then continuing on this bull cycle. So we're very close now, and with January 8th being tomorrow, this could all go down in the next 48 hours. This potential move into 48, maybe 50K Bitcoin, but for me, 47 was the move, and we've already hit 46, so we're within, 3% of one of the most volatile assets that ever existed? I would call that insanely accurate. So, again, we'd be splitting hairs here waiting for 47. And by the way, now that I've considered all this data and that I've shared all of this, I have my limit orders on Bitcoin still set at 47, but if I do not see anything going on by tomorrow, I'm probably going to go ahead and de-risk my position. I'm not selling all my Bitcoin, I'm just selling enough out of my overall portfolio to then be buying back at lower levels later, accumulating more Satoshis, accumulating more altcoins. I went over all of this in depth in the last podcast, so rewatch that if you're having any questions about this thesis. So, we're about halfway through today's podcast. I just want to wrap up this section because I want to then go into the S&P 500 chart and show you all of these years going back to the 1920s where we're seeing a top out in the early January timeframe. I've already went through this with Bitcoin for you. So we're just going to match that all together with the traditional markets so we could have more clarity, where we're likely to now have a very, very solid investment thesis. And if it goes against us for whatever reason, at least we did everything we can do. I've exercised every instrument possible to be able to dial in why Bitcoin is doing what it's doing right now, and to continue to disregard the exoteric noise of this Bitcoin ETF debacle, because I know that that is what's trapping in so many people into belief right now, and it's making them disregard the charts. So here we're putting in our prana into the charts, into the esoterica, and we're combining all these systems together, and we just have that awareness of the Bitcoin ETF as garnish on this plate. So, like I said, within the next 48 hours, we could have Bitcoin tap up into 47, maybe even 50K on an extreme move before January 10th, very likely. And then we could have Bitcoin coming back into 33K in the month of February. And this makes sense considering that the next FOMC meeting is on January 30th through 31st to finish off this month, pivoting into the month of February. And I feel this Economist magazine decode that I shared is very telling with this Phoenix coin on the cover. In this decode, I reveal a lot of 36 connections. You could see here, the day of January 9th, the day that we've been talking about quite a bit, was when this Economist magazine cover was released 36 years ago. So on January 9th, it'll be the 36th anniversary of this. Now, Phoenix, which this is, and it says Phoenix on this coin, equals 36 in Chaldean. So we have the date numerology of the release date of this magazine is 36. We're about to be on the 36th anniversary of that exact day. I don't know how many examples of January 8th and 9th that I've given today with Bitcoin's chart. Again, this is talking about blockchain and crypto. And then we have Phoenix equaling 36. Again, you can't make this up. What's even more powerful is the fact that 666 adds up to 18, and January 9th of this year has a 18 date numerology. This is powerful. So I went over all of that, but one more 36 connection I want to show you, and it comes back to something we talked about a little bit earlier, would be March 10th of 2023, the day that Silicon Valley Bank failed, being 306 days apart from this upcoming January 9th. You remove the zero in the rules of numerology, and you have 36. You cannot make this up. So I just showed you before about the power of March 10th. And comparing it to that date, I feel it's definitely something to keep in mind. Now, another little bit more obscure find would be if you connect this January 9th to March 13th of 2020. This was the Friday the 13th lows for the entire market, including the Bitcoin crash. This was just a couple days after the WHO declared the pandemic. And you have 3 years and 303 days. Again, removing the zero, you have the 333 code. It's a very, very powerful number. The number of the ascended master, the phoenix rising from the ashes, the ascension. All right? Now, I feel this is very kind of opposite, right? It's very kind of in the opposite arena. This is seeming that it would be the end of cash, and I don't think we're there yet. I do think this will be coordinated with the Bitcoin ETF thing, though. That makes a lot of sense to me. But remember before, we talked about 36, 3 plus 6 equals 9. We talked about 666 is 18, 1 plus 8 equals 9. January 9th is the 9th day of the year as well. We have talking about 333, 369. So this is all synchronized in a very heavy way, all right? And I'm not just making things up. I know that these are very broad connections in a sense, but these are powerful dates that I just connected it to. Specifically, the lowest that Bitcoin went during the 2020 cycle on a flash crash, then we were comparing it to the day of the black swan of Silicon Valley Bank and all of those bank failures. Again, this 3-6 connection. And then remember, this day happened on the 69th day of the year. Bitcoin's all-time high is 69,000, and we're approaching Satoshi Nakamoto's birthday, which will be on April 5th, 2024, which is on the 96th day of this year. You just mirror the numbers like you would do in alchemy. From today, and the last thing I'll say is from January 9th, this day that we've been pointing out, to Satoshi's birthday, it's 88 days apart. That number 88 is really powerful. It's the analemma of the sun and the moon, the pattern that the sun and the moon make, and that's what this whole market runs on. This is why I think what happened with Solana was an absolute ritual. Solana, the soul, sun. And I would not be surprised if around this April 5th date, leading into the next Bitcoin halving, around Satoshi's birthday, especially if this will be our short-term top soon, this will be around the time frame that we're going to see Solana at the lows, moving into the month of May, before the solstice. So around the solstice, we'll probably see a lot of stuff start to recover. But anyways, I don't want to get too much into that. Now would be the perfect time to get into the charts and to review what's going on over this past week. And I wanted to start out with this S&P analysis because we have the S&P 500 Year of the Dragon and a pattern for the month of January. I'm going to be going over here, and we're starting all the way back in 2000. I think it will be 2000 or 1928. So in 1928, you see the market topping out on January 4th. I find that to be very interesting, leading into the Year of the Dragon. Remember, our Year of the Dragon started it starts on February 10th this year. All the way back then, it was starting in the end of January. But just look at the topping out in January concept is kind of what I want to pay attention to right now. Now we're going to be going over to the next Year of the Dragon, which was in 1940, and that was around the time of World War II, by the way. And you can see right here topping out on January 4th. That's interesting, because that was the same thing that happened back in the prior iteration. Coming up a little bit into April 8th, and this is a very powerful thing, family. The fact that we had eclipses all around the same time as the 1940 cycle. And I do believe that we will have one more event tied to war in this upcoming, probably April into May, June timeframe. I really want to dial down the month of June, though, for many reasons. But April 14th into April 15th, in my opinion, will be a ritual. And I've shared this many times. I'm kind of thinking I should maybe just make a decode on it, even if it's short, because I know I've said this stuff a couple of times, but just to solidify a decode, share it, get it out there, and to prepare people for it. But I do see a mirroring of the 1940 war, World War II. And I do believe that it will take until 2025 for the United States to get involved, the year of the snake. But in this year, 2024, I do think another domino will fall, and it'll probably include China. It will likely happen before the elections, but we will probably be bullish into the election, and then the event will occur. So anyways, I don't want to get too ahead of myself here, but I'm just letting you know that I have this pattern repeating enough now to feel that past May, probably going to get something that shakes the market. And it will affect Bitcoin for sure. But we have right here, January 4th, just like in this prior iteration, we have here essentially January 3rd. So that's back-to-back cycles topping out in early January. Now we're going over to 1952, and we topped out in January 22nd, followed by a pullback, and we did not recover all the way until June. Interesting. Okay, so we're going to move over to the next cycle. And we have 1964, and this was one of those that we just kind of moseyed on up into the month of April, May, correction into June. So still a correction, but this was a very bullish year, just up and away. Let me move over now. We have 1976, effectively topping out right there in February, holding sideways until a little blip up until late March. We have that April top, and then from there, nothing until July. So what we've identified is that in a majority of these cycles, late March into early April is the top for the stock market. All right. Now remember, Bitcoin and crypto has this isolated narrative going on for ETFs. So I still feel that the stock market should be bullish until the lunar eclipse. As for crypto, we already went over all of that. So we're going to be moving on to the 1988 cycle, and you could see right here, we topped out on January 7th, which is today, and then a big correction on the 8th, which was a Friday, and we were effectively low until, again, like I just said, March, but topped out in April. This is kind of like picking up where I left off on the Bitcoin analysis, because we had a couple of those iterations showing us that in late March into mid-April, we could be very bullish. But I don't want to disregard the fact that Bitcoin has technicals to consider. We can't just only play it by time. But we can see that this short-term top in January is right there in line with prior data. Okay, now we're zooming into to the year 2000. This was very famous. It's the dot-com bubble. Look at what happened. January 3rd, we topped out all the way until March, where we had this bull trap to the upside, followed by a very deep correction into April. So this is fascinating too, because we have had how many now? 5 dragon cycles where we're topping out in early January. No new highs until late March or early April. That's the pattern, family. So we're over here into 2012. This was actually similar to the 1956 or one of those earlier iterations where we were just essentially bullish the whole way up until April. So April is across the board important in the year of the dragon. It's a GTFO by April sell sign. Again, when we talk about this concept or quote of sell in May and go away, really what they're telling you is get out by April. Okay, so it seems that during election years, it's smart to de-risk before the end of April. And right here, I've shown all iterations are going up into late March or early to mid-April, followed by a deeper correction into the summer. And we have had many cycles before of just topping out in early January. So it perfectly aligns. Now look at where we are now with the S&P. We can see that we've topped out effectively right there into the end of the year, had a little bit of a correction. But if I go over to the Dow Jones, you're going to see that the Dow has hit its all-time high on January 2nd. And we're doing pretty well right now. So could we have a quick buyback on the S&P? Well, I got to be honest, I don't really care, and I don't really think it matters as much, because what matters more for the stock market is late March into early April. Basically getting out around that eclipse season time. And we're talking wicks. So if I had to align all my ideas together, I think that the new moon of March 10th before, the new moon of March 10th is something to keep our eyes on because of all the information I just shared with Bitcoin earlier. But I love this pattern of early January. It seems to be aligning with Bitcoin's January cycles. So we have something to consider before the upcoming new moon on January 11th. Now I'm going to be going over the Bitcoin chart, and we're going to be doing some traditional technical analysis. And then we'll be wrapping up Bitcoin, getting into the altcoins, but we definitely need to talk about the Bitcoin CME chart. And by the way, some people might be asking, why do we spend so much time on this whole Bitcoin thing? Well, it's because Bitcoin runs this market, and if Bitcoin's going to have a 30% correction, what do you think all your altcoins are going to do? Like, I'm sorry to break hearts here, but no, we're not Bitcoin maxis. This is the truth. This is the Red Pill podcast. You needed to hear this stuff. A lot of people who only care about altcoins come here to this community, and within a couple months, they now see clearly for once. They're not all wrapped up in this altcoin thing. You need to use Bitcoin as the compass of this market, and if you're not, then it's going to be really tough for you to be able to take advantage of this market. All right? Just words of wisdom here. If Bitcoin does come back down to the 0.5 fib, well, you're going to see some dramatic corrections across the altcoin market, especially in the projects that are overextended. Projects like Solana, they could have a 70% correction from their current top. I know that sounds unbelievable, but I warned the Hex community about a 70 to 80% correction on that project. Every time I got some backlash, and I was just reminding them of the same thing. When you remove your emotions and you remove the tribalism and this worship of this project, and you just learn the charts and see it for what it is, this will make you an incredible investor. We're not emotional here. We're saving the emotions for our real life, not for crypto. We're leveraging on crypto to be able to gain wealth and then convert that wealth into something that will be laying the foundation for our people to have a more harmonious life. And with a more harmonious life, you won't need to be worried about these little moves on charts. You know, there's more to life than the charts is kind of what I'm trying to say here. So sorry to interrupt this with the, the clear pill, but I just wanted to get that out there. It's important right now that we see this for what it is, because we've watched this happen before in this correction in the last cycle, and it was very devastating for a lot of the altcoins. Right here, July 2019 to March of 2020, you pull up any altcoin that existed back then and look at what happened to it. All right, it was not fun, but you know who it was fun for? The people that de-risked this move and that had a plan in place and then traded that plan. You had an investment thesis. It's really hard to fail when you've designed an investment thesis that is not emotionally driven, that is not driven by tribalism, that is not driven by whatever the fuck the white paper says or the dev team is doing. None of that matters. The only thing that matters is this, is what we're revealing to you here. And the machinations of this market are undeniable once you see it for what it is. So this is important right now. I don't want you to feel like I'm the one holding the truth. You know, I've been very honest and transparent about this whole thing. I've been trying to teach a skill here. All right. So I want to start off this year with this energy because we want to work towards self-reliance. And the more self-reliant we all become on the individual level, it feeds the community's growth and expansion holistically. So let's get over to this, talk about this weekly close. Of course, we have a couple of things to go over that are just basic traditional analysis. One of this would be the weekly close, where Bitcoin could effectively be closing tonight the highest weekly close that we've had since 2022. So this is looking awesome. Very good. Even with these pullbacks in the chop that we've had this far. So we don't have a bi-weekly close coming until next week. That's a very critical close. Look at these bi-weekly candles. Holy shit. 1, 2, 3, 4, 5, 6, 7, 8, 9. We could be potentially, I don't know if we'll close that because of what could happen over the next 2 days, but that's probably a record. How many? 1, 2, 3, 4, 5, 6, 7, 8, 9. That's the most I think we've ever closed, right? There can't be too many iterations of this. Well, I think we just spotted something that's pretty damn important. Oh yeah, here. Holy moly. 10. So yeah, if we were to close this upcoming bi-weekly green, it would match the most bi-weekly candle closes green in history. There would only be one other time before that, and that was in 2013. Mamma mia. So this is looking incredible. We're into overbought around 74 on the bi-weekly. Let's look at our monthly. We had a very bullish monthly close for the year too, so green there. But anyways, getting back to the weekly, let's see where our 200s are and some of these moving averages. All right, so we have the 200 EMA sitting above 26 right now. I like that because that was the prior support on these two back tests over here during June and September before bouncing and going another leg higher. Overall, once this 55 simple crosses above that 200 simple on the weekly, that's a very bullish posture in general. Doesn't mean we're not still due for a pullback, but it just gives us more I would say, confidence that we have solidified what the bottom is, and we're more than likely just continuing on the bull run. Let's look at the 5-day. Got a 5-day closure coming in a couple days. Bitcoin closed off the highest 5-day close of the year on the new year. Incredible. 3-day, we just closed a 3-day, I suppose, the highest 3-day. And then the next one would be January 10th. So yeah, this is really what's on my radar right now, is closing a 3-day below the 13 EMA. Keep this in mind. If we're going to close a 3-day candle below the 13 EMA, I think that will start to trigger this sell-off. Just based on what I've seen Bitcoin do before. Once we close below that EMA, we tend to then follow with the 21 and then the 34, and then we just kind of cascade all the way down. And if we were to look at what happened back here in this cycle, we made it all the way back to the 200s after a wolf cross. Here in this cycle, we did swipe down to the 55. So I would definitely entertain that. Also right here. Pretty much swipe down into the 55. Over here, swipe down into the 55. And right now, our 55 is sitting at 33K. And that's what I already told you about. How our 0.5 fib is basically right there at 33,000. So I do think a retest of the 55 SMA on the 3-day is in the cards. All right, I really have nothing else to share. This is incredibly bullish across the board. Let's get over to Ethereum. And by the way, I do feel like we're probably just moments away from one final swipe to the upside. Oh, I should actually talk about this. We're going to turn off all this noise. We're going to get down to the 55-minute chart on the CME. Turn on our drawings. And we reviewed this whole fill of the gap in a update that I just shared. But remember, on the 1st, I talked about creating this gap. And I warned everyone about this gap being made between 42.5 and 44K. Well, 2 days before that, or 2 days later, Bitcoin effectively filled that gap, came down to the bottom, got bought back above it on a 4-hour close. Even the 1-hour closures held it before a bounce. Now it's started to actually effectively close above the top side of that gap, and it's looking pretty bullish right now. But remember what I also shared in my last YouTube video, we have this 44.5K resistance, and that's what we got bought back up into right around the weekly close for the CME. So we got to see where CME is going to open back up today. And then we're considering the upside move of 48K on the CME chart. But we did hit 47 on the CME. So brilliant. I'm getting this 48K target by pulling a micro fib between this high right here and this swing low. That gives me that 48-ish on the CME chart. Then I would suppose after that we fill this lower gap. One other thing to mention is if I go to the daily, you're going to see we do have a gap right here between 20 and 21K. So that would be, if we were to come up to the 48K region and then fill out this gap at the bottom, that would almost be a 60% correction. Now, we can't rule that out as a possibility, family, because this would actually align with our macro 236. That aligns with our macro 236 around 22K. The reason you can't count that out is because the prior iterations of this correction, we have 2 out of 3 of them going as deep as 50 to 54% correction off of the top of the bull trap. We had this correction be exactly 50%. We had this one exactly 40%. And we had this one was around 54%. I don't count the C19 crash because, again, that was a black swan. It just messes up the data. And you have to be honest about that too. But the thing that's important about this C19 crash is if you go to the weekly chart, and if you were to look how we came back to the 236 fib, that still aligns with what I just said. So it doesn't matter. Even if we were to make a move that deep, the odds are Bitcoin in the same week would be bought back up above the 236. So if we were to have a correction that much, that would align with what Bitcoin's done in the past. If we went up to 47K, came all the way down to the 236 around 22K, that would fill the downside CME gap between 20 and 21 effectively. And we would still be holding a bullish structure. We could also, after trading below this 236, get bought back up to above 25K Bitcoin in the same week. So, not my opinion, just what Bitcoin does. Whether it's going to be a 40 or 50% correction, it tends to be a quick buyback. It's not this arduous long-term, it's not the start of a bear market, that's for sure. So yeah, just keep that in mind because the CME chart is important at this moment with the fact that we have the 40K gap below, but we can't rule out this 20 to 21K. So for me, if I was able to de-risk at this 46-ish region and then buy back in at 20 to 21, that would be a wild play. It'd be a legendary play, but pulling it off will be tough because there will be liquidity issues in the downside for sure. You don't even understand how difficult it was for people to try to buy the C19 crash. It was barely possible. Very few were able to. All right. So you'd be lucky. And that's why you always want to set your levels more conservatively, either a little bit above if you're buying or a little bit lower if you're selling. So the reason I think the 47K is about as high as it's going to get is because, it's likely that even if we did go to 49 or 50, it would be hard to execute and trigger orders at 48, especially if it's driven by ETF news or any exoteric news, because there's going to be so much retail trying to pile in. And the whales will just have their sell walls set. Let's get over to ETH. Yeah, my intuition tells me that they're going to dump this market so the institutions can buy a Bitcoin at a 40 to 50% discount. And that aligns greatly with the idea that we could push all the way down to 20K again. Why not? Again, this is really, whatever happens next is going to be the test of your emotions. It's really going to be a test. So you heard it here first. You gotta get those emotions on the sidelines and now, because what's about to happen, it's going to shake a lot of retail up. A lot of people are going to say they didn't expect it. So we're kind of choppy on Ethereum right now, and it would be strange to entertain a swipe into the 618 just because of what Bitcoin is doing right now overall with Bitcoin dominance. I think ETH has essentially completed its move, and that hit our targets. We were looking for 2,400 ETH. Because we were moving into the year of 2024 and the Hebrew year of 5784, which adds up to 24. So we hit that numerological number. We talked about it so long before it happened. And it doesn't really need to go much higher. Now, what I want to entertain, though, is what happened back in this cycle. You can see when we made it up here, we had a devastating correction, which was about 70%. So if Bitcoin was to do a 50% correction, you could assume at least a 60% correction is in the cards for ETH. One thing to mention, though, is if we take from this swing high down to this swing low of the total cycle, it only lost a little bit more than Bitcoin's total loss. So Bitcoin lost 77% from all-time high down to the swing low of the cycle. ETH only about 82. So ETH is getting stronger over time. Less retail is playing with this. That's what's making it a more sophisticated play. So yeah, this is quite fascinating. If you were to look off of, if we disregard the C19 crash and just take from the top of the automatic rally, that's a 67% correction. So if we were to entertain a 50% correction, damn, that's back at almost 1,000. If we were to go a full 60%, we're breaking 1,000. It's hard for me to believe that right now, especially with how strong ETH is and how little retail's playing with it. They're just using it right now to transact shit coins pretty much. But yeah, I mean, if I feel that Sol and a couple of these other projects could have 70% pullbacks, then why can't ETH have a 50? Especially if Bitcoin's going to have potentially a 50. I'm still it's hard for me to imagine a full 50% correction for Bitcoin, but I'm not disregarding it. I can't write it off. You know what I'm saying? So yeah, I mean, even a 40% correction is getting you back below 1,500. And I've talked a lot about anything below the 382 is a gift. So I would probably only buy ETH if it's going to go into this sub 1,500 territory. For me, that's my own investment thesis. One other thing to say is March 10th, we only got to 1400. So it would be crazy to imagine that that would be enough for a larger sell-off. But I guess that was just retail banking, and that effectively was bullish for crypto because it was, well, like the narrative is the banks suck, so buy crypto. So yeah, I mean, I could entertain a lower than 1300 ETH for sure if we're going to see a 40% pullback on Bitcoin. Yeah, I mean, it would be almost a needed move to shake people out. You know, what we're moving into right now is what could effectively be one of the biggest shakeouts for the rest of this cycle. So once we get through that, it's kind of like getting through the C19 crash, you know? Okay, let's move on to XRP. So we got to come out and say it. XRP has been one of the worst performing coins of this whole entire move. We could pretty much 100% write out anything that has to do with the SEC case mattering. It's something I talked about back in, when was it? April, about how I don't care what's going to go on with the SEC case. I really don't feel like it's as effective as some people might think. And what we just saw with this break out of this triangle pattern to the downside really shows weakness. And now we've Bart Simpsoned again. So, mamma mia. Now, I did have some orders set at 56 cents that got triggered. And since then, we've only had this one big wick. We've had a day of trading at 55 and then right back to around 56. Today, we're trading at 56. So the theory behind all of that was the 236 fib, and how if we're going to go down and trade lower, it would make sense to be around this 236 fib. Now, we also have this macro white trend line. I should adjust this a little bit if I wanted to make it a little bit more extreme. It's going all the way to the bottom of this 2022 June moment. Let me see if this extends to the scene. Okay, beautiful. You can't get cleaner than that. So you see, this is the bottom of your C19 correction. This is the end of your flash crash of the start of the SEC versus Ripple case. And then you have right here, holding as a support in a majority of these corrections in the so-called bear market. So you have all of what was going on in August before a BART head, then returning back to the line, then snaking around it, another BART head, returning back in May, another BART head, returning back to it in August, September, and October, and now we've done it again. Mamma mia, will this fucking coin just wake up for once? And you know, really what this is this shows that retail is not buying this thing. Retail is primarily selling every time Ripple sells. So one thing to be clear about with this project is Ripple sells their own coins. So if anything, actually, this like confirms a statement that I've been saying that's been making a lot of people mad for the past 3 years, which is that XRP is a trader's coin. It's only there to really trade. And that's gonna be the case most likely until we get to around or after the Bitcoin halving. And then if it can start to break above $2, until it breaks above $2, you know, we've been ranging and choppy and doing these BART heads over and over again so cyclically to the point where it's like, yeah, you just kind of have to, this is the test of patience. Best example, I think. And I'm 0% frustrated, or I don't care at all. I did my de-risking already. And I've done all of my accumulation, and I've been playing this coin as a trader's coin now for going on over 2 years. So it's all good in the hood for me. But from a perspective of just being like, why is this project doing what it's doing? It's shown itself to me that the XRP army or the XRP community is not actually as invested in this thing as they seem to promote themselves to be. And that's dangerous because it shows you, not only are they such a toxic group, but they conspire too much about fairy tales. And then it also doesn't have the performance. And then it also has declining volume. It also has this BART pattern, this pumpy dumpy move so cyclically. And then I'm thinking like there is no hodling of this actually. It's mostly just leverage trading and then the market maker liquidating you over and over again. So yeah, I really have not too much of an update on this because until it could start to wake up a little bit more and hold some structure, it's just going to continue to chop. And this type of chop is getting to the point where covering it with TA regularly is maybe getting boring, to be completely honest. And I'm just saying that as a leader. I'm saying that as somebody who is aware that our community is growing. I'm trying to expand out into things that are not necessarily as much about crypto, like decoding and consciousness. And the more I review this project, I'm like running out of things to even recap. I'm just being real with y'all. So I'm going to continue to hold this thing as a big portion of my portfolio. I'll continue to update here and there, but it's probably going to be skipped over more often considering kind of like what we do with Ethereum. There's not too much more to say, So I hope that doesn't break anyone's heart. I'm not saying that I'm going to stop covering this project. I just think, we're at a point right now where there's been, what are we doing? Like this is 600 days of it can't really hold above 60 cents. Bitcoin's trading at 44,000 right now. Like it's just like, wow. We were coiling up, everything was looking pretty bullish for a breakout, and then with this breakdown, it's like yikes, So my sentiment hasn't really changed in the long term, but in the short term, I'm feeling a little bit bored on this one. There's probably a lot more energy that could be put in other places. And I don't think that this thing is a distraction. I'm not trying to FUD anyone out of it, but just giving my real, honest, clear pill testimonial on how this has been going since this one day of glory. Also we were talking about the 70 cent move back in the month of September. If anyone was following along this whole play, it was pretty magical to watch the fractal playing out as it was. And now that we have effectively had a break of this fractal, I think I need a little bit more data to come in, and then we could check back on what things are looking like for XRP. But to share my final thoughts on the TA on this. This is your micro buying climax. This is your micro selling climax. This is your micro AR. And right now we're kind of determining, do we want to hold this as a higher low structure and keep it bullish? But as long as it's holding this daily close right here of October 12th, it's fine. And then we have this overall trend line to consider for holding. It's been pretty damn effective most of the time. And if Bitcoin's going to have a little shuffle up to 48, I don't know if it's even going to help this thing. I'll say this final thing. I think the next big move on XRP is going to be isolated. It's not going to be with the rest of the altcoins. It's going to come out of nowhere. Very similar to this. It's just going to come out of nowhere. Big straight line. And from the technical perspective, if it could break 72 on a daily close, better yet, break the top of this golden pocket around 83 on the daily close, then this thing can literally go straight to $2. So keep that in mind. We're holding a bullish higher low structure, and we have been all the way since the C19 crash. But here we are almost 4 years later, and this thing's barely made any progress. So very lackluster, and we just have to be real. And we'll see what things are like next week. Let's go on to Dent. It's been a long time, I think, since I've covered this project. Oof. Okay, so we're looking at Dent right now. We have a little bit of data coming in 2019, so not a bunch of chart history. We have no prior bull run, just the recent run. We have your C19 lows down here, and this coin is up about 800% since then, so that's pretty nice. It's made progress for sure. We have its all-time high sitting at 2 cents, and it has corrected effectively a full 97%, so that's probably the end of your correction. Given that the pivot point was right there about the solar eclipse, that's also very, very typical. But one thing also to mention, was we never fulfilled this 1618 on the downside. So, okay, yeah, I feel this is more fair. This is probably more fair to pull it right there because this is your final correction before you had a break of support. That does get you pretty much to that 1618, but if I wanted to be fair, it would be here. It would be somewhere between here and here. Now, I'll show you what I'm going to do. I'm going to take this, I'm going to duplicate it, I'm going to put it right there at this 1618. I'm going to take this now, I'm going to adjust it to here. The reason is this was your fake out. And then we've corrected since. I'm going to delete these. I'm going to turn these red or green, whatever could indicate buy. And we're going to see what progress we've made on this move. Did we get up to at least the 236? I'm going to double click that, turn this on log. Yeah, so we got rejected twice, about 4 times off the 236, and recently after the selling climax. This is not bueno. So what we're likely to do now is if we come back to this 0005 level, probably breaking down to here. And this would make sense because this was everyone's spring back in the last cycle. This was your SOS of the last cycle, and this was your backup phase of the last cycle. And if you see where these lows are, it's at the top of your SOS. So that's not weird. And also you can see that was when we cleared that level, this shit went parabolic. So I really like this 00036 and 00042 on the downside. And that would be your spring. You could call this effectively your AR, somewhere around here, even though it's not a solid AR. In true Wyckoff, if you can clear the 236, I guess it would be an AR. But actually what you would want to see is clearing the 382 as a crypto AR in my analysis. So yeah, this is not looking too good. It could literally go another leg lower, especially if Bitcoin has a 40% pullback from where it's at now. You can definitely see this thing drop lower. To give you an idea, this was your solar eclipse level where Bitcoin was at 26K and this thing was still making new lows, you know, and Bitcoin, the all-time low for Bitcoin thus far is 15K on the current cycle. So this thing is not looking good against Bitcoin's price action. It's not looking good against ETH's price action. It's not really looking good at all. And with very limited data, it tells me to not invest in this thing. It's not the best opportunity given how weak this chart is. And if we were to entertain a move down to this like double bottom territory and getting back up to this 888 fib or even the golden pocket, I mean, I guess there's a 10x in the cards, but breaking new all-time highs, that would be harder to believe. We just need more data. But good enough. One other thing I could consider here is a little bit of a trend line. That's not fair. That would really be how I'd want to do this. Yeah. This could very well, in the month of May, could break lower. Okay, we're going to move on to, I need to cover E-Hex and P-Hex because it's been some time. Now, I know this is a super noisy chart, but just hang out with me for a moment. We're going to extend this. So just to revisit some information that I shared a while ago, on October 27th, after Hex made this very dramatic move to the upside, the straight line breakout, right around here at the top, effectively, I sent out a warning. And I said, this is not FUD. I talked about how there was a move back here in this moment where Hex went up in a straight line around the same time of year and corrected also in this same time of year. This was a full 80% correction. Also, it was trading at similar prices when it came up and got rejected. So here we are. We're zooming out, and you could see what we were comparing it to was over here. Hex went, if I turn this all off, you could see what I mean. So follow the cursor on the right. or you see where this top is. This is effectively what happened, and then it led to a very dramatic correction. Now, recently, we've actually started closing lower, and volume is also declining. This thing's continuing to sell off, and I'm very well aware that most people don't care anymore about eHex, but I've told everyone, even in my last interviews that I've done on Hex, that if you see the sell-off continuing in eHex, it will mimic what you're seeing in pHex. And I asked I think a good question, which was, could we be seeing a trade-off from eHex into pHex? And what I was told is that yes, but I still went with my gut and I said, I don't really think that will be the case. I think they will just sell off simultaneously, and thus far that is still the case, because you can see from where we are today to where we're trading at the lows, it's been effectively a 60% correction. And if we were to look at what we've seen from here to the current lows, it's a 60 to almost 70% correction. So it hasn't deviated too much. And the candle structure is pretty similar. Getting a little bit of a buyback today on eHex, and I know this is looking crazy. Let me just turn off everything for a moment. We are looking... I'm going to turn off volume, but you could see declination of volume, very low volume right now. That's not good. We had a wolf cross back here. Again, marking more movement to the downside. We had another daily close lower. Right now, I would not be surprised if we got bought back up a little bit and then got another rejection to continue down, especially if Bitcoin corrects. So this thing is not looking good. A lot of people said that the reason this move was happening was because of the update with the SEC against Ripple with Chris Larson and Brad Garlinghouse, and how because Richard Hart is in this mess with the SEC, that it would affect him positively, what went down with the Ripple case. Another thing that I thought was hogwash. But yeah, here we are again, not looking so great. This warning still stands. I wouldn't touch this thing with a 100-foot pole until it's back down, maybe here at 0028 on eHex. And I think that would match probably around these August lows and start even going lower. So I'm going to open this up and show you what I'm seeing. We had a huge symmetrical triangle playing out. You could see a test up here, test here, test here, test here, and then we just started to break out of this pattern. Now, another thing to notice, if I turn off all these moving averages, which I should, you can see here that we've also been getting rejected at this falling trend line, this resistance line. What this tells me is if we were to have a kickback, we still need to break this resistance in order for this to really start getting bullish again. And in the meantime, this is looking pretty weak. It's trading back within this horizontal low structure. I do think if we break below 0067, this red line here, that this thing will be going below 006 and effectively filling the wick of the launch date prices. So you see right here on May 17th, there was a wick that traded all the way down into 0036. This could start to fill that out. I know that sounds tragic, but again, this is kind of like where this project is at right now. So my honest analysis on this is with what's coming into this market, potentially a bigger correction on Bitcoin and how Bitcoin has been trading up lately and this thing has been falling in price, and it had a couple of days of glory because of a theory that what was going on with the SEC and Ripple case was somehow beneficial and boding well for Richard Hart. I don't agree with any of that. And remember how long this case has been going on for Ripple. Okay, this case has been going on for a very, very long time, and it's just started for Hex. So this is the beginning. This might cancel a whole bull run for Hex. I know that sucks to hear, but that is what effectively canceled the bull run for XRP. Now, XRP did have a incredible bull run when you take consideration of what the stock market does or something like that. So what do you mean, Waters? Well, let me show you. When we got to the lows of this C19, or sorry, not the C19, but when we get to the lows of this crash that we had because of the start of the case up to the automatic rally, it was almost 1,000%. So this thing 10x'd during the beginning of the lawsuit and since it's been lower. But again, what also was going on around here? Well, Bitcoin was in price discovery. And that's another thing that I've told the XRP community. You need Bitcoin price discovery for this coin to be also going up. It's just how it works. So yeah, I think with the start of that case, it's making it even more shaky, and with volume declining for both EHEX and PHEX, it's another sign. And as of today, this coin is down 99%, 99.2%. And it could be completing this full move to the downside here, retesting a double bottom around 003. I do believe it'll affect PHEX the same exact way, breaking down into these lows. And it's just more lows, just pretty much more lows, and nothing bullish here until we pivot out. And that could take some time. It could take until after eclipse season, moving into the months of maybe July. That's giving you a far forecast on this, and I'm going to give this some time to develop. I might come out with another update between here and there, but in the meantime, I'm going to leave it at that. I'm very bearish on Hex, the Hex ecosystem. I would not personally get involved in it. I don't own any. I'm not bashing it, by the way. I've been following it and very transparent about it since the beginning. I'm here to help the Hex community, the same way I've been trying to do it with the XRP community, just to share the clear pills, allow more awakening, to relieve people of the tribalism, to reroute the prana they give these things into their purpose and not into this cult, and to just become stronger individuals over time. And in order to do that, you know, someone needs to risk saying something that's not so sexy. So yeah, all in all, not looking too good on this project. I'll follow up on it if needed, but in the meantime, I still feel like it's on its way down into these lower targets. Now we're getting over into Algorand. All right. Woof. Okay. So we have, this is your C19 crash. Algo is trading within C19 lows. And I remember the last time I covered it, I harped on this whole move down here, which was lower lows than the C19 lows. So what does that mean? This thing is in price discovery to the downside. That's a very, very bad thing to talk about. When you're in price discovery to the downside, that's another way of saying that if you're gonna put money into this, you must treat it like venture capital, and to have large portions of money in this is really risking. It's really a gamble. So since the October eclipse, this thing is up about 100%. So everything has sort of done this though, like every coin under the sun has done a move of at least 100%. So that's nothing weird here. And now the fact that we moved up in just like a straight line like this is definitely worrisome, because since it's been correcting over the past couple days, let me show you, we're at a almost 30% drop thus far, and Bitcoin is still close to cycle highs right now, micro cycle highs, excuse me. This is not good. This means that this thing could have a full 70% correction potentially, going back to lows. I'll be honest here and say that, I mean, I would be surprised if this doesn't at least go down to 12 cents again. It should at least be going down there. Let me look if I have any fibs pulled. Okay, so this thing has a lower high from the highs that were coming in back in February, has yet to get above the 382 fib. So it's not a very powerful buyback. It's trading essentially at the same lows of the C19 crash. That's horrendous. Yeah, and this is one of those projects that we really want to be careful with in the next run. It might only make it back up to the prior all-time highs. Now, that's still pretty fucking awesome, because if it was to have a 50% correction now, and let's just say go down to 12 cents, you're looking at, yeah, a 10x, potentially 1,500%. Up to prior all-time highs. That's great and all, but perhaps you could also be achieving that in other places. So yeah, and this is a moment where it's important to remind people that like my $14 to $25 XRP like vision is not out of the cards. I hope that people know that. I still feel that based on the overall big picture for XRP, $14 to $25 is in the cards. So don't take everything I said before and, you know, throw it out of context in the big picture. Just in the short term, the next 6 months, it's not looking so good. you know? But it's only because the past 6 months have not been looking so good in the grand scheme of things. When we're watching what Bitcoin and ETH have been doing, and Solana and Binance token, you know, Cardano, which is weird to not be seeing anything going on in XRP. But what I'm seeing here is not really a big bet for me. I probably wouldn't put too much prana into this thing because of the type of behavior that it has and the overall chart history. The fact that it's in price discovery to the downside hasn't had that crazy of a buyback. It's correcting pretty hard as we speak. And yeah, I mean, 15 cents would make a ton of sense to happen very soon. And then 12 cents would be the next big target to the downside. This could very well end up at a double bottom or even continue price discovery to the downside, depending on how dramatic this Bitcoin correction is. Now we're going to go over to ICP. Okay, so ICP, the same shit. It broke out right after the eclipse. It's gone up a little bit more, about 400%. So that was a nice buyback. That's what a lot of things do in an automatic rally. But I'll tell you why it was able to go up so much, because look, it lost 99.5% of its value. It's done worse than Hex. So I am very concerned how many people have wanted me to talk about ICP quite randomly. And it's following the similar projection of like conspiracy videos are being released talking about all these reasons why you like need to be in this project. Guys, be careful of shit like that. It's very much what the XRP army was riding the wave of for like the whole 2019 through 2022 phase. You know, be very careful with that stuff. This thing lost 99.5%. Of course it could go up 400%. A lot of shit has gone up 400%. And if you scroll out and you see what is really going on here, you could tell that this is not really something to be applauding. It doesn't take much to send this market cap up a little bit after it's had all of it go away. Anyways, I'm not trying to like piss on people's parades here, but we need honesty. I don't get why this project is getting any news or information. It's just, anyways. All right. Again, just be careful with stuff like this. Very quick move to the upside. It's already had a 30% correction since. Once we start breaking the 236 on the downside, I do assume we're going to get to 850, and any daily closes that are getting below this current daily close structure, below 8.8, it's going to cascade all the way down to 4. So yeah, you'd be looking at about $4, $3.50 to $4.50. That would be your range on a pullback. Let's look at some of the moving averages, if there even is any to look at. Okay, yeah, so your 200 simple is at 470. That, again, sub $5, kind of in the cards. All right, so one thing at a time. We close below the 8. We're closing below the 13. Now, today, I think if we are to close effectively where we're at, that'd be breaking that 13 EMA. Big warning sign. But the ultimate one would be a close below the 34 EMA. If this thing closes below the 34 EMA, it's going to drop straight to the 200s, I assume, pretty quickly. And this thing is known to have random 100% pumps followed by dumps. Here you have 200% pumps, dump. So I'd assume at least a 60% pullback on this minimum. So that's bringing you back into $6. And then, yeah, the 70% pullback theory is very much in play for a lot of this stuff that's just had this explosive move lately. So I also have no plans to touch something like this. Limited chart data. I know about this pre-ICO shit they did. It was a scam. Fuck this project. I know it's going to ruffle some feathers, but yeah, I'm not a big fan of institutional players and people who set up something to then dump on retail. That's not it's not honest. It's kind of like the definition of evil. That's what this coin is. So I don't care what updates they have. It doesn't really concern me. There's plenty of other opportunities. If you were to consider getting back up into prior all-time high area around this golden pocket, it's just as much as everything else. Every coin is likely to do 1,500% in the coins that are in the conversation, right? Okay, we're going to pass over this one. We're going to Casper. Just a quick recap, because Casper is one of those projects that I talked about, this 382, and I drew this red line, and we popped up to it after a couple of signals that I shared, one of which was a confirmation of getting above this blue line and breaking out above this white line. So this white line is the most important because it was the long-term resistance. We popped out of it effectively at the beginning of December. Then this white line was a support level that we were holding up until around August. And then right here at the apex of both of these lines, we came up to it, rejection. And then since breaking out, we've back tested this. So that's a very important trend line. Both of these are important trend lines. And then I drew this horizontal line because we always want to consider horizontal. Sorry, one second. We always want to consider the horizontal market as well. And you could see that was your first test, another test, break, retest, rejection, retest, rejection, retest, rejection. So I've kept my fib pulled from 24 cents down to the swing low, and this is actually looking like it's ready to break out. The only issue now is we have the potential correction coming up on Bitcoin. And from where it's topped out recently down to the current sell-off, we're about 18% down while Bitcoin is about to break out. So this isn't looking so good. This was driven solely by a retail move, and as quick as it goes up is as quick as it could go down. So look for this 236 to be breached, because if it starts trading below 4 cents, I do think this is going to come down to the outside of this trend line, and that would be bullish as hell. So I think this shit's available on Uphold. I might even get a little bit of this, like just a little bit casino money. We're talking about 0.75% of my portfolio. The only reason why is because of the way this structure is looking. Now, I got to be honest, this looks like a shit coin to me, very similar to the ICP chart, shit coin. This is not convincing, but I do get it enough to look at it as my venture capital play. So yeah, I might throw a little bit into this. Probably wouldn't get close to 1% of my portfolio. And I'll update all of you, of course, in the Discord if I end up doing that. But I would personally wait till a retest of around 3 cents or a little bit lower. This 2.6 level would make sense. And if we were to come down there, that would be a 50% correction. With what I just shared before about Bitcoin, with a 40 to 50% correction, that also makes a lot of sense. And yeah, I mean, what are we looking at? If we just got back into the top of our resistance, it's 700%, but then above that is infinity. Like there is, because of the way this structure is built, and all of this horizontal range that we have. I mean, it's going on almost 1,000 days of below 24 cents. So if this thing could break 24 cents, I do think the 1618 is in the cards, because that's just around launch price. So you got to think of the method to my madness here. If we were to just return to around launch price, it's a 3,000% move. It's in alignment with what I've shared with that 2,500%. So for play money, it's fine for me. Again, it's an absolute shit coin chart. Venture capital at best. I'd be very cautious on this kind of stuff. Even with its upside potential, you have to be aware that it's effectively still in price discovery to the downside. So that's not me saying that this project looks better than the ICP chart or the Algorand chart. They're all effectively pretty bad. But again, it's the Red Pill podcast. We learn a lot from looking at all these charts. We take notes. It helps us brush up on our investment thesis. And once in a while, we do get projects that look pretty rad and look like opportunities. So I had a great time on today's episode. We talked about so many different theories. I'm really looking forward to the next one already. We are within 48 hours of what potentially could be an insane move for Bitcoin, followed by a pullback. But we do have to keep in mind and be open-minded in general to what I shared with the couple of iterations with February 10th through 12th, as well as we do have a potential series of iterations sending us into late March or early April, which would align with the historical data of the S&P, going on almost 100 years of data of all the years of the dragon. So My feeling is I'm leaning more to the next couple of days will be topped out, and then we'll probably follow by a pretty decent correction, and there will be beautiful opportunities in the month of February, which is in alignment with something I've been warning of, kind of bringing up often for the past couple months here. So we'll see how things go. I will update you all tomorrow if needed with a short market update, but I've been very open and transparent this whole podcast. I hope you've been taking notes, and this is maybe one of those that you want to rewatch again because there's a lot of stuff that's scattered throughout here. So I appreciate every single one of you. Hope you've been having an amazing start to your new year and that you enjoyed this first red pill of the year. Appreciate you. Much love.